Hi students, welcome to Sunil's tutorial. I am Sunil Mirwani and today we will be doing this chapter called as cost sheet. We are going to do sum number 8 today, question number 8. In the books of Sweet Sugar Limited. In the books of Sweet Sugar Limited, cost sheet. For the year ended, they said that, you can see that data for the year ended. Units, CPU, TC. Okay, let's see the sum, guys. They said that the state government granted license to Sweet Sugar Limited to manufacture and sell sugar with a stipulation that 40% of the output should be sold to the state government at a controlled price of 3,000 rupees per ton, and the balance output can be sold in the open market at any price. Following are the details of sweet sugar as on 31st March. During the year, 3,600 tons of sugarcane was consumed at 1,000 rupees per ton. 3,600 tons of sugarcane at 1,000 rupees per ton. So that is going to be 36 lakhs. Right? Do we get this? Now, towards the end of the sum, if you see the last paragraph, they are saying that, guys, can you see the last paragraph? They are saying that during the year 2,400 tons of sugar was produced. So my output is going to be 2,400 tons. Output is going to be 2,400 tons. Some of these divide 36 lakhs by 2,400. 36 lakhs by 2,400. So CPU of direct material is going to be 15,000. Fine, do we get this thing clear? Next, let's move on ahead. 15,000 or 1,500? Yeah, this is going to be 1,500. Okay, let's move on ahead. They are saying that direct labor amounted to 825 rupees per ton. 825 rupees per ton. Multiply 825 by 2,400. 19 lakh 80,000. Right? Direct expenses are given to you as 4 lakh 20,000. Divide 4 lakh 20,000 by 175. So that will give you your prime cost. Someone please help me get the prime cost. Right? Someone please multiply this or add this and tell me. How much is this? 60 lakh. So 60 lakhs. Okay. Now let's see working note here, guys. Working note. Particulars. We will bifurcate the three expenses: factory overheads, office overheads, and sales overheads. You're going to bifurcate the three expenses. Okay. Now, telephone charges. Telephone charges. Telephone charges are office overheads. Telephone charges are given to you as, someone please read that, 3,52,000. 3,52,695. Right? Next, let's move on ahead. Right? Telephone charges. Next, they've given you office computer purchase. Now, guys, please listen to this carefully. If any asset is purchased, if there is a purchase of asset, it is not to be recorded in the cost sheet. Purchase of asset is not to be recorded in the cost sheet. Please remember this rule, that purchase of asset is not to be recorded in the cost sheet. Right? Let's move on ahead. Office computer purchase we will not record. Factory rent and insurance. So rent and insurance. 3,54,760. 760. This is of factory. Okay. Next, machinery purchase. I just told you the rule that purchase of asset is not to be recorded, so machinery purchase will not be recorded. Let's move on ahead. Machinery repairs. Machinery repairs. Machinery repairs is 98,847. 98,847. Then commission on sales. Commission on sales is going to be a sales expense, so I'll put it in the sales column. Commission on sales. Someone please tell me how much is it?
3,37,650.
3,37,650. Then you have factory salaries. Factory salary will go in factory. Someone please read the amount to me. 2,19,588. Right? 2,19,588. Then you have carriage outward. Carriage outward is a sales expense. 1,54,090. Next, packing expenses.
1,94,450.
1,94,450. 1,94,450. Right, that's packing expense. Then you have bank interest. Another thing. Like how purchase of assets is not recorded, similarly finance expenses are also not to be recorded in the cost sheet. So purchase of asset and finance expenses are not to be recorded in the cost sheet. Fine, do we get this thing here? Let's see, this packing expenses will not be recorded. Then you have no, packing expense no, bank interest will not be recorded. Then you have factory electricity. Electricity. How much is it? Someone tell me.
2,61,380.
2,61,880. Right? Then you have after electricity
Delivery van
delivery van expenses.
expense.
Delivery van expenses is going to be sales expense. How much is it?
6,850.
850. 1,06,850. Then you have coal consumed. Coal consumed. Coal consumed is 3,80,125. Next, after coal consumed, you have depreciation. Depreciation on machinery is
49,600.
then you have another depreciation on
Computer.
computer that will be in office. How much is that?
4,180.
And sales, there's a depreciation on delivery van which will be
1,57,360.
1,57,360.
360.
So those are your depreciation entries. Next, you have office salary. We had already recorded salary, guys. This was factory salary. Next to that, I'll record office salary, which is 1,89,325. 1,89,325. Next, printing and stationery.
1,13,000.
Is 1,13,000.
14,000.
Right? Now, once you've done this, add these columns. Someone please help me do the addition of these three columns. One of you add the first, the other add the second. You add the first.
First one is 15,64,800.
How much? 15 lakh 64,800.
800.
Third one is 9,50,400.
Center one.
$8,59,300.
Okay. So you have all the three figures. Now all you have to do is transfer them to your cost sheet. So factory overheads you just found out is 15,64,800. Right? Some of these divide that by 2,400. 15,64,800 divided by 2,400. 652. Right? There is no sale of scrap, opening and closing stock of WIP. So this is 253152. Someone add this 800, 4, 6, 5, 7. 7,64,800. Office overheads we have already calculated in the working note as 8,59,200. Someone please divide this by 2,400. Someone divide this by 2,400.
358.
358. 3,510. Someone cross check guys please.
8424
8424. Someone add this also and check this figure also.
right.
Okay. There is no opening and closing stock of finished goods, so this is 3510 and 8,42,400. No, 84,24,000. Okay. Sales overheads we have already found out is 950, 400, 9,50,400 divided 396. So you will get a total cost. Someone please add this.
937 4400 937
93,74,400 and this is 3906. Someone check this also please. Right? Okay. Once you've done this, now let's see the opening paragraph guys. They've said that let's see the opening paragraph. State government granted license to Sweet Sugar Limited to manufacture and sell sugar with a stipulation that 40% of the output should be sold to the state government. Right? So here you will have to rub this. Less sold to state government. Right? How much is going to be sold to state government? They are saying that 40% of the output has to be sold to the state government. Right? My output was 2,400 tons. 40% of that has to be sold to the state government, which is nothing but 960 tons at a stipulated price of 3,000. So the price is given to you as 3,000 rupees per ton. At 3,000 rupees you have to sell 960 tons. That comes to
80,000.
28,80,000. Okay. So after selling to the government, what you will get is total cost of open market. How do you do this? Plus, please first subtract this.
64,94,400.
Right? Now, you had manufactured 2,400 tons. And 960 tons has been sold to the government. So that means how much is available in the open market? Someone please subtract 2,400 minus 960.
1440.
1440 tons. Someone please divide this by 1440 tons. 64,94,400. 4510. Now, see the last line guys. The last line says that the company's profit target during the year for fixing open market selling price on the basis of cost sheet is 10% on average paid up capital of 1,42,56,000. They have said that profit should be 10% on the capital. Capital figure is given to you as 1,42,56,000. 10% of that will be 142,5600. So that will be 14 lakh 25,600. Divide this by 1440.
990.
990. So my sales in the market, someone please add and tell me how much will be the sales. 5,500 rupees per ton, and someone add that also.
79. Let's just say
79 lakh 20,000. Right? This finishes this sum. We'll stop this here for the day. Thank you very much.